Hello everyone, how are you all? This is your faculty CA Rohit Grover and welcome you all to the new lecture in our CA final paper number 3 Advanced Auditing and Professional Ethics Rapid Revision batch for May and November 22 onwards, right? So as you all might be aware of the fact that we have already covered like so many sections of the company audit, and now we are on the maintenance of books of accounts, some sections. So where we have already covered 128 and 129. So quickly let's do the 130 and 131 and 132. After 132, I'll take you to 135, that is called CSR, and then 134 will do. Are you getting that? Along with 133. And after that, we'll be completing our dividend chapter, and afterwards, we'll be starting with our most important topic called Professional Ethics, Code of Ethics, right? Now, in section number 130 and 131, if you carefully see, it is there in front of you. Section number 130 talks about what reopening of books of accounts and recasting of financial statement, and why does this section apply? I will tell you. And section number 131 also, you know that it is all about voluntary revision of board report, or financial statement. Now see, what is 130? If the NCLT on its own, if the NCLT suo motu feels that, or somebody has made a complaint to the NCLT, if the NCLT on its own or somebody has made a complaint to the NCLT, who can make a complaint to the NCLT? SEBI, ROC, Income Tax Department, Central Government, or any statutory authority or any concerned person. Any of these 6 people have made the complaint to the to the NCLT, or NCLT felt on its own. Sir, we understood NCLT felt on its own, or somebody made a complaint to NCLT. But what is a complaint? Complaint is that कि भैया books of accounts of this company are prepared in a fraudulent manner. The books of accounts of this company are prepared in a fraudulent manner, and affairs of the company are mismanaged. Again repeating, what are the 2 complaints? Books of the company are prepared in a fraudulent manner, and affairs of the companies were mismanaged, due to which there's a huge doubt casted on the credibility and acceptability of financial statement. As you all know that financial statements are prepared from the books of accounts. So if the books of accounts are prepared in a fraudulent manner and the management was involved, which was completely doing the mismanagement, obviously there will be a doubt casted on the financial statements credibility. So who is making this complaint? Either SEBI, ROC, or you can say Income Tax Department, or Central Government, or any other statutory authority, or any other person making a complaint to NCLT, or NCLT felt on its own. If the NCLT is satisfied on the above complaint, or NCLT smelled it like yes, company is making the books of accounts in fraudulent manner, then NCLT will pass the order under section 130. Now what is the order under section 130? Reopening of the books of accounts and recasting of what? Financial statements. So bhaiya, reopen your books of accounts and recast your financial statement, and the coverage of this order is going to be up to the 8 preceding financial years. As you all know that every company maintains their books of accounts and preserve it for at least for the last 8 accounting years. So if the complaint will be raised, then it will be, you can say that yes, NCLT can pass the order for reopening of the books of accounts up to the preceding 8 financial years. Are you getting the point? But before NCLT is passing this order, NCLT has to give the notice to all the requisite concerned authorities, and the reason of section number 130 and 131 is also required to be presented in the board report. So this is what 130 all about. And what is 131, everyone? 131 is all about voluntary revision of board report or financial statement. As you all know that board of directors are having the 2 responsibilities. What are the 2 responsibilities? They have to prepare the board report as per section number 134, and they also have to prepare the financial statements as per section number 129. If the board of directors of a particular company feels that while preparing the board report or while preparing the financial statement, they did not comply fully with section number 134 relating to board report and 129 relating to financial statement, they themselves can make an application to whom? NCLT. Now, why they are voluntarily making the application to NCLT to let them revise the board report or financial statement? Because they don't want to come under the scanner of NCLT and they don't want to pay the penalties and fines. So it's better that prevention is better than cure. They only realize their mistake and they are making the application to whom? NCLT. And if the NCLT is satisfied with their application, then NCLT may make or NCLT may allow the board of directors to revise their board report or financial statement. If the NCLT is satisfied, order under section 131 will be placed. And remember, what is the major difference between 130 and 131? In the 130 order, the NCLT can put this order to reopen the books of accounts of preceding 8 financial years. But in 131, if the NCLT is ordering under 131, it may only allow you to revise your financial statements or revise your board report of up to preceding 3 financial years. So 8 financial years are allowed in 130 and up to 3 preceding financial years is allowed under 131. So that is what the major difference between what. Now you can see that coverage is here up to preceding 8 financial years and coverage is here up to preceding 3 financial years. So 130 is a forcible section by the NCLT on the company to reopen the books of accounts and recast your financial statements. Whereas 131 is a voluntary section where the board of directors are applying to the NCLT ki please allow us to revise our board report or financial statement. There the coverage is up to preceding 8 financial years. Here the coverage is up to preceding 3 financial years. But let it be 130 or 131. In both the cases, if this order, any of the order or both the orders have been passed by the NCLT on a company has to mention the reasons of 130 and 131 in their board report. Did you get the point? And most important difference is also that here complaint is involved, where in 130, and in the 131 complaint is not involved, application request is involved. Board of directors are requesting to the company. Is it clear, everyone? Yes or no? Yes. Now next section is 132, everyone. So first let us complete the section number 132, which is very important section. And 132 section is all and all about NFRA. So 130 is over, 131 is over, 128 is over, 121 is over. So I will be picking up the very most important sections of this particular area. Now what is 132? 132 talks about NFRA. Now, sir, please give us some little bit introduction of NFRA. Now, when we talk about the NFRA, the first thing you have to understand that NFRA is a filter between ICAI and MCA. You all know what do you mean by MCA? Ministry of Corporate Affairs, and ICAI, Institute of Chartered Accountants of India. As you all might be aware of the fact that ICAI is entrusted with a duty to form accounting standards and standards on auditing. Today also, accounting standards and standards on auditing will be made by, will be formed by, will be established by ICAI only. But now ICAI directly cannot ask the MCA to notify it. Those accounting standards and those standards on auditing which the ICAI is making now first will be now forwarded to whom? NFRA, National Financial Reporting Authority. Once it is forwarded to NFRA, if the NFRA thinks that this new standard on auditing or new accounting standard or INDAS is valid enough for the better fair presentation of financial statement, then NFRA will now make the recommendations to whom? Ministry of Corporate Affairs. So you can say that between ICAI and between MCA, NFRA has started behaving like a filter. So first ICAI has to throw all its accounting standards, standards on auditing, amendments on accounting standards to whom? To the NFRA's pocket. NFRA will analyze it, monitor it. If the NFRA feels that yes, it should be notified by the MCA, then NFRA will report it to MCA and finally it will be notified. After that only it will be applied to our portion. So between ICAI and MCA, now NFRA has come. Now NFRA is not only playing this role. Let me tell you one thing. NFRA is playing a very huge and important role. Now what is the role NFRA is playing? Now try to understand. Nowadays NFRA is also taking care of professional misconducts and other misconducts which are conducted by the auditor while doing the audit of so many types of companies. Sir, but we too heard in the code of ethics that professional misconduct and other misconduct will be punished and penalized by the ICAI. No longer. More than half of the powers of the ICAI have now been vested in the hands of NFRA. NFRA is a more constitutional, more bold body as compared to ICAI. NFRA has started taking the more punishment steps against the fraudulent auditors and fraudulent members in practice if they are involved in particular type of scam and scandal. Now NFRA has mostly all the companies का auditor and the company's functioning, whether it is properly happening or not, auditors are properly working or not, if they are involved in fraudulent activity like scam and scandal. Now NFRA is taking care of and punishing you in relation to your professional misconduct and other misconduct. I'm not saying that it is completely given in the hands of NFRA, but majority of the powers of the ICA has been vested in the hands of NFRA. So that we'll understand over the period of time. So what is NFRA? First we'll understand. Sir, what is NFRA? NFRA is an institute or an authority which basically is going to monitor the services of auditor in terms of quality review of services rendered. So NFRA is now acting as a watchdog on the services which are rendered by the auditors. If the NFRA feels that yes, there is a particular hole or there is a particular black spot in the quality of the services which are rendered by the practicing CAs, then in that case NFRA will interfere and will make sure that the appropriate punishment will be given to that particular chartered accountant in practice or a firm in practice guilty of professional misconduct or other misconduct. Now, next thing, sir, who has constituted the NFRA? NFRA is constituted by the central government. Why it is constituted by the central government? To make sure that matters relating to accounting standards and auditing standards can be in a better manner taken to the eyes of Ministry of Corporate Affairs. So as I told you already, first ICA used to do the same, but now ICA no longer is directly interacting with the Ministry of Corporate Affairs. ICA, if they want to put their standards on auditing and accounting standards on the board of Ministry of Corporate Affairs, it has to go through the eye of National Financial Reporting Authority first, established under section 132 by the central government. So who constituted NFRA? Central government, monitoring the accounting standards and standards on auditing and the amendments in these standards brought down by the ICA. Now, what is the composition of NFRA? So remember everyone, in the NFRA total 16 members are there. One is the chairperson of NFRA. And what is the qualification of the chairperson? There is no particular qualification for being the chairperson of NFRA. He should be a person of eminent personality and having a good expertise in the fields like law, taxation, finance, accounts and auditing. And there are not more than 15 members required in the NFRA. And in these 15 members, some of the members will be part-time and some of the members will be full-time members. Next one, before joining the NFRA, make sure that the chairperson and the members of the NFRA must give a declaration of independence. All of them have to give the declaration of independence, the chairman as well as all the members. Now, what is the declaration of independence? In this declaration, they are saying that we do not have any conflict of interest with the entity which is under their investigation. And at the same point of time, we do not have any relationship with that audit firm or of whose case they are handling right now. So remember one thing, NFRA has to give, the chairperson and the members of the NFRA has to give this declaration before joining the NFRA. And this independence, they don't have to maintain only at the beginning of joining the NFRA. They have to maintain during the full course of their employment. On every assignment which they will get, they have to provide this declaration of independence. And not only that, even after leaving the NFRA, suppose you left the NFRA, after leaving the NFRA also for the next 2 years, you are not allowed to have any kind of relationship with that audit firm or that chartered accountant in practice who was under the case of NFRA. Are you getting the point? So not only you have to maintain the degree of independence during the employment, you are also going to maintain it after 2 years from ceasing to become the member of NFRA. Now, what are the powers of NFRA? As I already told you that most of the powers of professional misconduct and other misconduct relating to members in practice and members in service, which used to be handled by the ICA, now has been shifted to whom? NFRA. Now, what are the powers which have been shifted to NFRA? Now, clearly look at that. Whether suo moto, if the NFRA suo moto believes that, means what? Somebody made a complaint or NFRA on its own believe that, or complaint made by the central government. Who made a complaint to NFRA? Either central government made the complaint or NFRA suo moto believes that. What it believes? That the member or the firm of chartered accountant is guilty of professional misconduct or other misconduct. Either you are guilty of professional misconduct or you are other misconduct. By looking at this meaning, you are already getting confused. Sir, ये तो हमने Code of Ethics में पढ़ा था. This one we read in Code of Ethics. But remember, some of the powers of the ICA has been shifted in the hands of NFRA. So not only ICA is going to take care of the professional misconduct and other misconducts of the chartered accountants in practice and the firm of auditors, along with the ICA, NFRA is also watching you and monitoring you throughout your practicing, right or not, throughout your practicing era till the time you are doing the practice. So if any firm or a chartered accountant is guilty of professional misconduct or other misconduct, NFRA has the power to investigate that professional misconduct or other misconduct. Are you understanding the point? What I was saying, that let's do the wrap up of the first power of the NFRA. The first power of the NFRA says that if NFRA finds out on its own or somebody has made a complaint to whom? NFRA. Now what is a complaint? That member or the firm of auditor is guilty of professional misconduct or other misconduct, then the NFRA has the power to investigate. Now the question arises, sir, what if the NFRA has started the initiation or NFRA has initiated the investigation? Remember one thing, once the NFRA has started the investigation, then in that case, no other authority or no institute can start the proceeding. This is a special power given to the NFRA. Next one, what is the next power of NFRA? NFRA also has the civil court powers. The civil court judges are having the powers like enforcing your attendance, examining you on oath, examining the witnesses, summoning and enforcing your attendance. All those things, the powers which are given to the civil court judge, are also being provided to the NFRA. You can see that summoning and enforcing the attendance. You can see that examining them on oath, inspection of any books of accounts, and examination of witnesses. So what a civil court judge can do, the same powers are given to the NFRA. The first one, power to investigate. 7(1), power 2 of the civil court. Now power to impose the penalty. This is very, very important. If after the investigation, the NFRA believes that yes, this particular auditor or the firm of auditor is guilty of professional misconduct, then what is going to happen? Then in that case, NFRA will impose the penalty. Sir, how much penalty NFRA will impose if it is an individual case? If it is a case of an individual auditor, then minimum 1 lakh, maximum 5 times the remuneration received or the fee received. And if it is a firm of auditors, it is minimum 5 lakhs and maximum 10 times of the fee received. So again repeating, if it is an individual member involved in that professional misconduct or other misconduct, it is minimum 1 lakh, maximum 5 times of the fees received. And if it is firm of auditors involved, it is minimum 5 lakhs and maximum 10 times of the fees received. Not only that, you will be debarred from being practicing in CA profession. You are not allowed to be a member or COP holder anymore, and you will be debarred for minimum 6 months from your practice, maximum 10 years from your practice. So it is and, means it is and, both the things will take place. Fine also it will be imposed, and at the same point of time you will be debarred from practice. Next one, sir, if I am not dissatisfied, if I am not satisfied with the order of NFRA, is there any authority where I can go and appeal? Yes, the authority is known as NCLAT, National Company Law Appellate Tribunal, where you can go and file an appeal. Next point, sir, how many meetings NFRA can do? NFRA can do as many meetings at whatever the place they want, at whatever the time they want. Next point, other employees and secretary. If you think that the NFRA is not able to handle the so many cases with the required staff and with the present staff and present employees, then NFRA can hire more number of employees and more number of staff as per the requirement. Where the head office of the NFRA is located? Head office of the NFRA is located at Delhi, and it also has the branches at some other places. Next point, who will prepare the books of accounts of NFRA? Books of accounts of the NFRA will be prescribed by the central government. How the NFRA is going to prepare its books of account? That will be prescribed by the central government, obviously in consultation with C&AG, Comptroller and Auditor General of India. इसका audit कौन करेगा NFRA? As we know that it is a central government authority, so therefore the audit of NFRA is also going to be conducted by the C&AG, and after doing the audit, it will forward its audit report and financial statement to the central government. And once the audit report and financial statements are audited by the CAG along with its annual report, what the central government will do? Central government will put all these documents in front of both houses of parliament, so that finally the audit of the NFRA can be closed. So these are the various introduction things which you should know about the NFRA. What is NFRA? What does it do? What are the powers of NFRA? Power to investigate, power to impose penalty, power of civil court, how many members are there, what is the declaration they have to provide, till when they have to maintain that independence, after leaving NFRA also till when, where the books of accounts, how the books of accounts will be prescribed, who will do the audit, and how it will be laid down in the both houses of parliament. So this is what all about the NFRA you should have known. Now we are going to understand NFRA Rules 2018, which were notified on the 13th November 2018. On 13 November 2018, so many rules have been notified. So among them, few rules which I'm going to discuss with you, which can be very important from your examination point of view. As I told you that nowadays NFRA has little bit taken up the responsibility from the shoulders of ICI. So what the central government has done, central government via these rules, especially via rule number 3, has given a special power to NFRA. What is a special power have been given to the NFRA? Ki NFRA does have the investigative powers on such class of companies and body corporates and their auditors. Such class of companies, body corporates and their auditors. Now question is, sir, which companies have now been covered under the preview, under the scope of NFRA, on which NFRA can conduct the investigations? All the listed companies either in India or outside India, you are only and only going to be investigated by now whom? NFRA. So all the listed companies in India or outside India will be investigated by NFRA. Next one, if you are an unlisted public company but your outstanding borrowings are 500 crores or more, paid up share capital is 500 crores or more, or your turnover is 1000 crores or more, now you are also going to come as an unlisted public company under the scope of NFRA. Are you getting the point? Next one, if you are a banking company, insurance company, electricity company, any company made under the Special Act, or any body corporate made by the central government, then also you are going to come under the scanner of whom? NFRA. NFRA can investigate these companies also. Next one, any class of company, body corporate, person which is referred to NFRA by the CG, which is in the public interest. If the CG feels that it is in the public interest that NFRA should investigate this particular company, even though it is not covered under the NFRA rule number 3, then also NFRA will take care of that investigation of that particular company which is referred to NFRA by the central government. But it should be in the public interest. And all those foreign branches, all those foreign associates, all those foreign subsidiaries whose parent company is located in India, but you as an associate, you as a subsidiary located outside India, but your parent company is located in India, and as a foreign subsidiary or as a foreign associate, you are contributing at least 20% in the total consolidated income of the group or 20% in the consolidated net worth of the group, that foreign subsidiary and that foreign associate is also going to be investigated by whom in India? NFRA, not ICAI. So in total, 5 types of companies have been included in the scope of NFRA. Point number 1. Listed companies in India, outside India. Unlisted public company whose paid up share capital is 500 crores or more, outstanding borrowings is 500 crores or more, or turnover is 1000 crores or more. Banking, insurance, electricity, any company made under the Special Act or any body corporate required by the central government. Any other company which is referred by the central government in the public interest, or foreign associate or foreign subsidiaries which are contributing at least 20% in the consolidated net worth or 20% in the consolidated income of the group. So this is what do you mean by rule number 3. Did you all understand the rule number 3? Now, information relating to the auditors. Now, every body corporate which is covered under rule number 3 has to inform about their auditors to NFRA now. Now, informing about your auditors to NFRA is mandatory. Every existing body corporate other than the company governed under these above rules, all those body corporates other than the rule 3 companies shall intimate and inform NFRA about their auditors within 30 days from the commencement of these rules. Means those companies which are covered under rule number 3, they are going to be investigated by the NFRA. But other than them also, they have to inform, other than rule 3 entities, they also have to inform about their auditors to whom? NFRA within 30 days from the commencement of these rules. And when these rules commenced? 13 November 2018. And those body corporate other than company defined under section 2 subsection 20, all those body corporates which are other than defined under section 2 subsection 20 which are formed in India, They also shall inform NFRA about their auditors appointed under section 139 subsection 1, that is called subsequent auditor, within 15 days from the appointment of such auditor. Means for the normal companies, they have to inform within 15 days from the appointment about their auditor to the NFRA, and those body corporates other than rule 3, they have to inform about their auditors within 30 days from the commencement of these rules. Next point kya hai? In form number NFRA1. What is the form number within which they have to inform? They have to use the form number NFRA1 to inform about their auditors. Next point. Note. All ceasing to be the listed companies or body corporates means what? Suppose you cease to be falling under the rule number 3. Even though you are unlisted or listed, for the next 3 years also, you still continue to inform about everything, or you still continue to get governed under NFRA. Suppose you delisted in India or outside India. Suppose your paid up share capital fell below 500 crores or more, or outstanding borrowings fell below 500 crores or more, or turnover fell below. So if you are a listed company or unlisted public company, even if your limits have no more eligible to be covered under rule number 3 under the NFRA, you are still liable to report to the NFRA for the next 3 years. They shall still be governed by the NFRA rules. Next one. Rule number 3 is over. Now rule number 4. Now, what are the functions and duties of NFRA? What does the NFRA does? Basically, NFRA establishes the high quality for accounting standards and standards on auditing. I am not saying that ICA is not doing that. ICA is very well doing that, but NFRA is monitoring that ICA must establish those kind of accounting standards and standards of auditing which are assuring the high quality work. And NFRA is also doing the effective oversight of accounting of the body corporates and auditing by the auditors. Whether the accounting by the company is being done properly or not, or whether the audit by the auditor is being done properly or not, that is also effectively taken care of or taking monitored by whom? NFRA. And why this all things NFRA is doing? To protect the interest of investors, public, creditors and other affected parties. See, I am not saying that ICA is not doing the same. ICA is also doing the same. But NFRA is a more aggressive body. It takes care of the public, stakeholders, creditors, other affected parties. It wants that the best quality standards on auditing and accounting standards should be brought into the picture. It wants to bring that it should always be keeping an eye upon the accounting done by the body corporates and auditing done by the auditors. Mainly, it focuses on maintaining the details of particulars of auditor. So their main focus of NFRA is that they should maintain the particulars of the auditor, recommend AS and SA for the approval by whom? Central government, monitor and enforce compliance with AS and SS. Company should follow AS and the auditor should follow SS. It is monitor and enforcing that they should comply with that. Checking the quality of the services of what? Professional. Remember, don't confuse NFRA with peer review and quality review. Everyone is having their own role to play. Next one, raising the standards of Indian AS and SS with the international institutes. Remember one thing, our standards on auditing, accounting standards are very good, but still they are lacking in meeting the standards which the international standards have set up in India. So to make sure that Indian accounting standards and Indian standards on auditing should, compete with the international one, that's the reason NFRA has been brought in India. Is it clear? Next point kya hai? And promoting awareness. So this is the major functions and roles of what? NFRA. Now rule number 5. Every auditor under rule number 3. Under rule number 3, companies ka auditor shall file its annual return with NFRA in form number NFRA2 specified by central government on or before 30th November. So every auditor under the rule number 3 shall file annual return with NFRA in form number NFRA2 specified by central government on or before 30th November. Next point. Main rules. Basically, NFRA has 4 major functions. What is our rule number 6 function? Recommending SAs and AS to whom? Central government. Right or not? Next one, monitoring and enforcing the compliance with AS. On what company? Now tell me one thing here, SA is written? No. Only AS is written. It means rule number 7 is completely focused by NFRA on companies which are following those accounting standards. So first one, it will recommend SAs and AS to central government, which ICA is doing. So it means NFRA is keeping an eye on ICA also, so that ICA should provide the best quality AS and SS. 7th rule mein, it is monitoring and enforcing the compliance of accounting standards on body corporates. 3rd mein, it is monitoring and enforcing the compliance of standards on auditing on auditor. And rule number 9 also, overseeing the quality of service and suggesting measures for improvement. So NFRA is not a fault finding machine, what we think of. Generally, we have a bad attitude towards the NFRA. We think that NFRA is something which is a fault finding machine. It is completely after running behind the CS, but aisa nahi hai. It is not about running after the auditors and all. It is all about, telling you to maintain your quality if you're going somewhere wrong, and giving the recommendations for improvisation. Not only on auditors, it also keeping the eye on body corporates, that they should follow the accounting standards also properly. Auditors should follow the standards on auditing properly. So rule number 7 and 8, you can differentiate between that. And 6.1, it is monitoring on ICA also. ICA should provide the quality standards on auditing and accounting standards so that it can be recommended to whom? Central government. Rule number 6, NFRA. What is the rule number 6? NFRA shall receive the recommendations from ICA on the proposal of new essays and on amendments. So ICA will make the new essays and AS as always, and it will also propose the recommendations on amendments to existing essays and AS. But it shall be first given to whom? NFRA. If the NFRA wants, it may ask the additional information if required from the ICA on the A above. It means if the NFRA thinks that whether any additional information is required, the NFRA will not hesitate in asking ICA why this particular standard or why this particular rule is required. Next, shall consider it, and if things fit, it shall be recommended to the central government. That is rule number 6. So, pehle NFRA received, NFRA analyzed. If NFRA thinks that additional information is required, if not required, it will immediately carry forward these rules and give to whom? Central government to notify it in the Ministry of Corporate Affairs. Did you get the rule number 6? What is rule number 7? Ensuring that companies should maintain the accounting standards and comply with the accounting standards very carefully. Are you getting? NFRA may review the financial statements of the company or the body corporate. Whenever the NFRA wants, it can go to the company and ask them to give their financial statements. Next one, it may ask the additional information from the company, body corporate or its auditors by giving written notice. If the NFRA thinks that there is a problem, or anyway, if it wants to clarify any kind of doubt, it may give a notice in writing to that company, to the body corporate or the auditors, and ask the additional information. May require personal presence of the officer in review of the financial statement. Whenever it is reviewing the financial statement, they want a particular officer of the company to be present at that point of time, and shall publish its findings relating to non-compliances, if any, on its website. If the NFRA finds any non-compliances by the company or a body corporate in following the accounting standards, it will immediately publish it on the website, on its website, unless it has a reason to believe that there is a code of confidentiality which is going to be broken. If the NFRA thinks that the code of confidentiality can be broken, if it will directly publish it on the website, it will be public and it is sensitive information, then NFRA directly will go and report it to the central government. Otherwise, NFRA will not think twice before publishing the name of that entity or the company which is not following the accounting standards properly on its website. Next point, if the NFRA thinks that there is any violation of accounting standard, that it may decide for further investigation, NFRA may go for the further investigation or enforcement action through its concerned division. That is rule number 7. Rule number 8 is now monitoring and enforcing the compliance with standards on auditing on auditor. This is on auditors. NFRA may review the audit working papers and communications relating to the auditor. So, jitna bhi audit documentation you make, or jitne bhi audit working papers you prepare as per SA 230, all of that can come under the review and the scanner of whom? NFRA. NFRA can evaluate the quality control system. Jitna bhi as per SA 220 and 230 you are maintaining the quality control system, NFRA can question on that also. NFRA can also do the testing or sampling of supervisory techniques which are adopted in your firm. NFRA may also demand the general practices and internal practices report from the auditor. What are your governance practices and what are your internal practices which you carry out in your audit report? So basically, NFRA is analyzing your way of doing the work. It is analyzing your quality standards. It is analyzing your 230 working papers documentation. It can do the testing on you. It can ask you your governance practices. It can ask you your internal processes. Why NFRA is doing that? So that NFRA can promote the high quality standards, so that it can protect the auditor's reputation. It is doing it for you only, not for anybody else, so that it can reduce the risk of failure of auditors, and so that necessary actions can be taken on the basis of report. NFRA may demand the personal presence. Like NFRA may demand the personal presence of the officer in case of compliance of accounting standards on the company. NFRA may also ask the personal presence of what auditor when the NFRA is reviewing your work, right or not? Next one. Again, if the NFRA will find that there is a non-compliance on the standards on auditing, so NFRA will publish that non-compliance findings on its website. But if the NFRA feels that that is little bit confidential, sensitive in nature relating to auditors' information, then NFRA can sneak it into the ears of central government very slowly. It may send a separate report to the central government containing that proprietary and confidential information for central government's information. Matlab, that is what I told you. If the information is proprietary in nature, confidential or sensitive in nature, it may sneak it out in the ears of central government. Where it has a reason to believe that there is a violation of any standard by the auditor, then it may decide further investigation or enforce the action through its concerned division. Next one. Overseeing the quality of services and suggesting measures for improvement. What the NFRA do? NFRA may direct an auditor to take measure for improvement in the quality in terms of. अगर NFRA को लगता है कि there is one particular auditor who is not maintaining the good quality while doing his audit, तो NFRA can suggest him some measures to improve the same. What can be the suggestion? Suggestion can be change in the audit process or change in the quality control standards or change in the audit reporting with specified detailed plan of action within time limit. So NFRA is basically giving you a time limit so that you can show to the NFRA ki whatever the improvements and suggestions NFRA is looking for in your quality of audit, you are giving the NFRA back that report ki these are the improvements and suggestions which you told me I have already done it. Auditor is under an obligation to incorporate those improvements and send a report to NFRA explaining his compliances. It is the auditor's responsibility that whatever the improvements NFRA is telling you, you should do that and finally report it back to NFRA. NFRA shall monitor the improvements and take the necessary action if required. After your compliance report, which the NFRA has suggested to you, has come to the NFRA, NFRA will monitor your improvements and take necessary action. If the NFRA believes that your case should be forwarded to QRB, Quality Review Board, the NFRA will forward your case to the Quality Review Board and call for extra information. NFRA may take assistance of its experts also on checking your activities. So this is a rule number 6, 7, 8, 9 relating to NFRA. So 6 was on ICA, 7 was on body corporates following the accounting standards, 8 was on auditor following the standards on auditing, and 9 was on overseeing and monitoring the quality of auditing done by the auditors. Next one. Rule number 10. Power to investigate. NFRA shall forward the matter of further investigation or action, if any, on its own, suo motu, or on the reference made to it by the central government, or on the basis of compliance or overseeing and monitoring activities. NFRA shall report to central government if there is an evidence. Agar NFRA ke paas evidence hai to believe that ki company has not complied with any act or rules and regulations, and the fraud involved in the company is more than 1 crore, then after the commencement, then in that case, NFRA can directly report it to whom? Central government. After the commencement of these rules, no body, institute or authority shall initiate the proceeding if the NFRA has already initiated. मैंने तुम्हें पहले ही बताया था कि once the NFRA has started the investigation, no other person can investigate it. But for the companies other than rule number 3 who is still investigating, I already told you कि only rule 3 companies, auditors, body corporates are coming under the scanner of NFRA. Other than that, still it is to be done by the ICA. So for the companies other than covered in rule number 12, cases of professional and other misconduct of company or body corporate shall be continued to be proceeded by whom? ICA. Next is rule number 13. If a company or officer of the company or auditor of the company or any person violates the rule of what? NFRA. अगर आपने NFRA rules violate करे तो भैया penalty under section 450, and 450 is a general penalty section where on whom company, OID and auditor, every officer and company in default, every company and officer in default shall be punishable of a fine up to rupees 10,000 and 1,000 rupees per day if the default continues. So 450 is a very general penalty section which you have already read in your company law. And finally, rule number 16. To promote and aware the significance of accounting standards and standards on auditing, quality of audit and auditors' responsibility among company body corporate auditors by giving training, seminar, education and workshops and publicity. So NFRA is not only a fault finding machine. If the NFRA believes that some seminars, some workshops should be conducted for the accountants and auditors and companies to have a better compliance of accounting standards and standards on auditing, NFRA will do the same. So that brings an end to your very important section number 132, which talks about NFRA. Now, section number 133 is a very simple section. 133 says that central government to prescribe some accounting standards. As you know that before 2015, every company in India used to follow accounting standards. But after 2015, when IND-AS came to India, after 2015, some companies are still following the accounting standards, and some companies are still following are now following the IND-AS. So those companies which are following the IND-AS, they should follow the IND-AS standards, and those companies which are following the accounting standards, they should follow the accounting standards from AS1 to AS29. And before NFRA, there used to be one body called NACAS. And what is the full form of NACAS? Then full form of NACAS is National Advisory Committee on Accounting Standard, which used to be there before NFRA, but it was only taking care of accounting standards. But now NFRA is taking care of both accounting standards as well as standards on auditing. With that, your section number 133 is over. Section number 134 किसके बारे में है? 134 talks about the board report. 134 talks about the board report. Now, what are the contents of the board report? Remember one thing, in the contents of the board report, you have to be very much understand the one thing, that board report under section 134 talks about all the things which are happening in the company right from the day 1 to 365th day of financial year. So how many number of boards meetings have been conducted during the year, that will be reported in the board report. Extracts of annual return, you all know that some parts of the annual return will be called as extracts, that is required to be attached in the board report in MGT 9. And if you want to see the full annual returns of the company, it will be published on the website of the company, and web link of that website will be given in the board report. And if you are interested in understanding the risk management policy of the company, that web link also will be given in as one of the content of the board report. Why section number 130 and 131 has been imposed on you by the NCLT, that reason is also going to be a part of your board report. What is the constitution of your audit committee, nomination and remuneration committee, shareholder relationship committee, etc. in the company, that is also going to be the part of your audit report. And what are the CSR initiatives taken during the year, that is also going to be the part of your board report. Next point, highlights of the major things happened during the year, like major contracts, major commitments if the company has entered, that highlights are also going to be the part of your audit report. How many number of subsidiaries, associate, joint venture entered in the group of the company and left the group of the company, that is also going to be reported in the board report. How many energy consumption conservative initiatives taken by the company during the year, that is to be reported in the board report. How much foreign exchange earned and foreign exchange spent by the company during the financial year, that is also going to be reported in the board report. Technological advancement, if you have adopted, that is also going to be reported in the board report. Top 10 employees of the company, performance wise and salary, they are also going to be reported in the board report. And the details of those employees are also going to be the part of your audit report, who have worked in the company throughout the year and earning the salary for more than 1 crore 2 lakhs per annum, and details of those employees who were employed by the company through the part of the year, not for the full year, and who were getting the salary or remuneration exceeding 8,50,000 rupees per month. And you also have to attach the director's responsibility statement and how many KMPs added or removed during the financial year. All these things are going to be the part of your board report under section 134. And as I told you that you have to attach the director's responsibility statement to section number 134, subsection 3 talks about the director responsibility statement. First of all, try to analyze what is the heading called. Heading is called director's responsibility statement. Now, what are the responsibilities of the director? Now, if you analyze, accounting policies should be properly selected and properly implemented. That is the responsibility of the directors. Accounting estimates are properly made and well judged. That is also the responsibility of directors. Accounting records are reliably prepared. That is also the responsibility of directors. Accounting standards are consistently followed. That is also the responsibility of directors. Going concern assumption is appropriate. That is also the responsibility of directors. laws and regulations are properly complied with, that is also the responsibility of directors, and internal financial control systems are properly installed in the company and working properly in the company, that is also the responsibility of directors. So this is known as directors responsibility statement. So you can see that all these 7 declarations are being given as it is. So I'll tell you to remember how it is: accounting standard, accounting policies, accounting records, accounting estimates, going concern, laws and regulations, internal financial control system. So that is what brings an end to your director responsibility point. But if your board report and director's responsibility statement is not being prepared as per section number 134, and if you have violated that, then company will be liable to a penalty of minimum 50,000, maximum 25 lakhs, and officers in default who are defaulter, who have done the fault in preparing the board report and director responsibility statement, they will be liable to a penalty of minimum 50,000, maximum 5 lakhs, or imprisonment up to 3 years, or both. Did you get the point? So this is your penalty under section 134 if your board report and director's responsibility statement is not matching. These are some of the extra points you can write in the board report. Comments on negative or adverse remarks kept by the auditor or by the secretarial auditor, that is also going to be the part of your board report. Amount of profits, if any, transferred to reserve, that is also going to be the part of your audit report. Dividend recommended by the board, either final or interim, that is also going to be the part of your audit report. Next one, evaluation and performance of its board of directors and committee members of the listed company and unlisted company whose paid up share capital is greater than or equals to 25 crores. That is also going to be part of your board report. Public deposits raised, repaid and defaulted, if any, during the year, that is also going to be the part of your board report. And declarations made by the independent directors, that is also going to be the part of your audit report. Now the main point is, sir, who is going to sign the audit report? Now remember, if the board report, sorry, not the audit report, if the board report is, who is going to sign the board report? Who are the signatories of board report? If the chairman of the company is authorized by the board of directors, if the chairman of the company is authorized by the board of directors, then only chairman will sign the board report. If the chairman of the company is not authorized by the board of directors, then 2 directors will sign the board report, among whom one should be MD. So you can see that if the chairman is authorized, only chairman. If the chairman is not authorized by the board of directors, 2 directors, among whom one should be MD. And in case of OPC, definitely who will sign? Only 1 director will sign. Next point, sir, who will sign the financial statement? India mein culture is that ki auditor also signs the financial statement, but actually as per section number 134, auditor never signs the financial statement. Here also the same thing you have to understand. If the chairman of the company is authorized by the board of directors, so chairman will sign along with the chairman, CEO, chief executive officer, chief financial officer, and company secretary of the company will sign. If the chairman is not authorized by the board of directors, then 2 directors will sign, among whom one should be MD plus CEO, CFO, and CS. So remember one thing, as per section number 134, no chartered accountant, no auditor signs the financial statement. But as a culture is there in India, no one believes the financial statement unless signed by the chartered accountant in practice or their auditor. And for the CEO, nowadays, need not be a director first to sign the financial statement. So earlier what used to happen, if the CEO wants to sign, he has to be a first director and then CEO. But now you need not be a director first to sign the financial statements as a CEO. That brings an end to your section number 134. Now what is 136? 136 talking about the sending the financial statements to whom? Member. That is what 136 is saying. 136 is saying that if you are a listed company, then in if you, section number 130 says that financial statements copy is required to be sent to whom? It is required to be sent to every members of the company, every debenture trustee of the debenture holders, as well as the auditors. But if you are a listed company, then you need not send the full financial statement. Only the salient features of the financial statement are required to be sent in form number AOC 3. But the full-fledged financial statement, you have to kept it open for inspection at your registered office during the business hours at least 21 days before the AGM. So full-fledged financial statement will be kept open for inspection at registered office during the business hours at least 21 days before the AGM, or business hours means 9 AM to 6 PM. If somebody demands the hard copy, then you have to give the hard copy. But there is one rule number 11. What is rule number 11? If you are a listed company and if you are a unlisted public company whose turnover is greater than 10 crores and net worth is greater than 1 crore, then in that case, you always have to send the financial statement copy on their mail. But only if the members have the demat account. So if the members are having the demat account, then financial statement copies are required to be sent on a mail. But if the members do not have the demat account, but they have given their consent to the company that we do not have any objection, if you send us the financial statement on email, to them also company has to send via email. But those members who neither have the demat account or not consented to the company has to send them the hard copy or the physical copy only, and violation of this section number 136 will draw a penalty on the company for 50,000 and OID fine of 5,000. Clear है? And in case of section 8 company, ये तो CSR activities के related है, so that will understand in CSR. So section number 136 is also over. So we are only left with 135 and 137. So let us understand what is 135, everyone. जल्दी से पढ़ लेते हैं. What is 135? 135 is CSR. What is 135, everyone? 135 is all about CSR. Let me see if anything is there. So, what is section number 135? Section number 135 talks about the corporate social responsibility. First of all, to sir, we have to understand ki what is this corporate social responsibility. Every company which is covered under section number 135, they have some social responsibility towards the society. So that is why it is called as corporate social responsibility. So what the company has to do? Company has to do some CSR activities which are listed in schedule number 7. Company has to do those CSR activities which are listed in schedule number 7. Sir, to whom it is applicable? It is applicable to every company either listed in India or outside India, or listed, unlisted company, public company, foreign company, Indian company or foreign company, public or private company, and it also covers even section 8 company. Next point. Sir, it is applicable to the companies when? It is applicable to the companies only when either of the three conditions are satisfied. Condition number 1. Your net worth should be greater than equals to 500 crores or more, or your turnover should be greater than equals to 1000 crores, or your net profit is greater than equals to 5 crores. How much of CSR expenditure the company has to spend? At least 2% of the average of the last 3 years net profits. Next, sir, is this CSR expenditure going to be qualified as a business expenditure? Answer is no, because if we'll allow you to qualify it as a business expenditure, then the company will get a tax benefit. Company is indirectly saving its tax. Then what's the point of doing the CSR? Am I correct or no? So it is not allowed as a business expenditure. Next one. Sir, will I be getting any kind of exemption under CSR? Remember one thing. If continuously for 3 financial years, you are unable to satisfy net worth condition or turnover condition or net profit condition, then the 4th year onwards, you are not supposed to do any kind of CSR expenditure until and unless you do not fall under the section number 135 again. Next point. So if the CSR expenditures is underspent, what will happen to the underspent amount? Underspent amount will be carried forward in the next year, and next year you have to spend the next year CSR as well as the underspent amount of the last year. But sir, what if the company has spent overspent CSR? Overspent CSR, nothing can be done. In this case, company will not be allowed to carry forward in the next year. Sir, do we have to constitute a CSR committee? Yes, of course, you have to constitute a CSR committee. CSR committee only will decide that from schedule number 7 which CSR activity has to be done. And CSR committee only will recommend it to the board of directors to spend the CSR expenditure. So if you are a listed company, then your CSR committee should have at least 3 members, among whom one should be independent director. Company other than listed companies, may you can make a CSR committee with the 2 members also and no requirement of independent director. But if you are a foreign company, your company also will be having the 2 members, and one will be the nominated by the foreign company, and one will be the member who receives the who receives the communication on the behalf of the foreign company. Are you getting the point? So 2 members will be on the audit committee of the foreign company. One will be nominated by the foreign company, and one will be that member who will be receiving the correspondence or communication on the behalf of the foreign company. Next one. CSR committee will decide what to spend and what not to spend, where to spend, where not to spend, and it will give the directions to the board of directors, and board of directors have to carry out the directions of the CSR committee as suggested by CSR, and in case the board of directors are unable to spend, no penalty on them, but if they are unable to justify ki why did not they spend, then there is a penalty. So what is the penalty for the non-compliance of section number 135? Same like 134. Company का penalty है minimum 50,000, maximum 25 lakhs, and officer in default का penalty है minimum 50,000, maximum 5 lakhs, or imprisonment up to 3 years or both. But this penalty is not on non-spending; it is on non-justification of non-spending. Now, next few things which you know about, which you should know about the CSR activities. Ki sir, suppose there is one company and this company wants to do a CSR activity. How it can do the CSR activity? So let's say, for example, Reliance has to spend 1,000 crores on the CSR activity. What the Reliance can do? Reliance can do one thing. Reliance can constitute its own Section 8 company and it can do the CSR activity on its own behalf. So Reliance can make, say, for example, Reliance Foundation, and it can do the CSR. Or you can hire another Section 8 company, not your own. You can hire another Section 8 company which is approved by the central government to do the CSR on your behalf. Or neither you are making your own CSR company or Section 8 company, nor you have any kind of other Section 8 company which is approved by the central government. Then in that case, what you can do, you can hire any other Section 8 company which is having a consistent track record of at least 3 years of doing the CSR expenditure. So either you can make your own Section 8 or central government approved Section 8, or any other Section 8 which is having a consistent track record of doing the CSR activities in the last 3 years. Clear, everyone? Next point. So in case you are not able to do the full-fledged CSR on your own, suppose your CSR is falling short of something which you have in mind, then you can have a combination also. What is the combination? You can do the collaboration with any other company or any government company to do the CSR. So there are 4 methods of doing the CSR. Either you can create your own Section 8 company, or you can hire a Section 8 or similar company like Section 8 which is approved by the central government, or you can hire any other Section 8 company which is having the consistent track record of doing the CSR activities of the last 3 years, or you can collaborate with any other company including government company to do the CSR expenditure. But the most important thing which I would like to tell you is the amendment which came in CSR. Now, what is the amendment came in CSR activity? Now remember one thing. COVID-19 related amendment has come in the CSR. What is a COVID-19 related amendment? Now, COVID-19 related amendment is that if you are spending the CSR expenditure on COVID-19 activities, then you are qualified. It is qualified to be a Schedule 7 activities. So yes, you will get the, you will be like qualified to call it as a CSR expenditure. But what kind of activities? Suppose you are spending the CSR money on medical oxygen cylinder and storage plants, health infrastructure, ventilators, or medical equipments for COVID-19 and such other kind of problems. Not only for COVID-19, if you are spending the money for COVID-19 or such other problems, or if you are not spending the money on this, you are donating that money or you are contributing that money to those specified R&D projects, to some public funded projects or other certain organizations which are engaged in these activities. So either you are doing it, that is well and good, or if you are contributing to any other organization or projects which are involved in those kind of activities, then also it will be considered as CSR expenditure. Are you getting the point? Relating to COVID-19 or such other problems like COVID-19. Now, this amendment came when this amendment came on 5th May 2021, and if you alone are not able to do the CSR, you can do that also in collaboration with another company, including the government company. So this amendment came on 5th May 2021. Then again another amendment came on 30th July 2021, where they say that CSR expenditure will also be qualified if you are distributing free COVID-19 vaccination to the people other than your employees and other than your family members and relatives. Then also you are qualified, because if you are spending the money on COVID-19 vaccination of relating to your employees, you are doing the welfare of your employees, relatives and family members. That is your duty. That is not your CSR. That is your duty. So other than your employees and other than family members, if you are doing, then in that case also it will be qualified. So total 3 things relating to CSR qualification it has come. If you are doing any health center or medical equipments or ventilators, oxygen cylinders, storage plant, You are doing it on your own, CSR expenditure to be qualified. You are contributing it to the specified projects, R&D projects and other certain organizations who are doing these activities, then also qualified to be a CSR. You can also do it in collaboration with any other company, including the government company, then also it is qualified to be a CSR. Or if you are doing the CSR expenditure on COVID-19 medicine for the employees, other than employees and your families and relatives, then also it is qualified as a CSR. Now, this amendment came on 30th July 2021. So this is the amendment relating to CSR activities. So that brings an end to your section number 135 as well. Now we are moving towards the last section, that is called section number 137. Section number 137 is connected with section number 92. As you all know that every company has to file its annual returns with ROC. Every company has to file its annual return with whom? ROC within 60 days from the date of AGM. Same way, 137 says that every company has to file adopted financial statements with whom? ROC within 30 days from the date of AGM. Adopted and approved by the shareholders in the AGM. Within 30 days of AGM, the one copy of that financial statement you need to file with ROC in form number AOC 4. But if you are a parent company, then you are going to file AOC CFS 4 also, that is consolidated financial statement. But if you are a listed company, or if your paid up share capital is greater than equals to 5 crores, or if your turnover is greater than equals to 100 crores, or your financial statements are prepared as per IND AS, then you have to file AOC XBRL 4 form number. But if you are a NBFC, if you are a housing finance company, if you are an insurance company, electricity or banking company, you are exempted from XBRL. तो XBRL किसको फाइल करना है? Listed company को, and any other company whose paid up share capital is 5 crores or more, turnover is 100 crores or more, and the company which is preparing its financial statement as per IND AS, they have to follow XBRL format and they have to file AOC XBRL 4 form number. Parent company AOC CFS 4 form number. Standalone financial statement AOC 4. But if you're a banking, insurance, electricity, NBFC, housing finance company, then extensible business reporting format language form is not applicable. Now, there are three situations may arise. AGM is held and financial statement are adopted. Then within 30 days, file the financial statement with ROC and complete your work. AGM is held but financial statements are not adopted. It means that is a problem. First, you have to file unadopted financial statements with whom? ROC within 30 days from the AGM, because financial statements are not adopted. Then in the subsequent meeting, whenever these financial statements will be adopted, again you have to file the adopted financial statements again with the ROC within 30 days from that meeting in which those financial statements are now adopted. But if the AGM was supposed to be held but not held, then in that case what you need to do? Then in that case the financial statement copy shall be filed with the ROC within 30 days from the date on which the AGM could have been held. The maximum date on which the AGM could have been held. And in case there is a violation of section number 137, अगर आपने 137 को follow नहीं किया, then company will be liable to a penalty of 1000 rupees per day subject to the maximum of 10 lakhs, and officers in default में MD, managing director, and chief financial officer will be liable to a penalty of 1 lakh rupees flat plus 100 rupees per day subject to the maximum 5 lakh rupees. But if the MD and CFO is not there, then this penalty will be imposed on any authorized director which is authorized by the board to take up this responsibility. If that authorized director is also not there, then all the directors will be held responsibly. But how OPC will file its adopted financial statement? OPC has to file its adopted financial statement within 180 days from the end of the financial year. Why, sir? Why not AGM case say 30 days? Because OPC mein AGM is not applicable. So that brings an end to your section number 128 to section number 148. So 128 to 137 we have covered, including 132 NFR, a very important section in this chapter, and 139 to 148 we have already covered under next section in the company audit chapter earlier in the earlier videos. Only 138 is left, that is called internal audit, that we are going to cover in the internal audit and management and operational audit chapter. So with that, your very major important topic called company audit is over, except the dividend topic, that is called 123 to 127, that we are going to take place in our next video. So thank you so much everyone for watching this video. I hope you liked the revision, and do share it with your friends if you think that they are worthy of being watched. I'll see you guys in the next video. Bye bye everyone. Take care.